lower. But first, the European Central Bank is cutting its economic growth forecast and offering cheaper loans for banks to help boost the Eurozone economy. The ECB announcement fueling concerns over the global economy, with the Dow and other major indices tumbling in the wake of the announcement, as you can see so far today. European markets closed lower as well. But guys, what do you think this says about the state of the market? I should say. Not a lot of people were expecting this. I'm clearly flustered right now. We didn't see this coming. So what do you make of it? Jack, I'll start with you.
It's scary. I mean, you see Draghi come out and you go from 1.7% down to 1.1%. You have so much weakness right now in China. And so if you just look at the global economy, I mean, a lot of concerns in the emerging markets. It's a lot of things going on that are unexpected. And for me, when that happens, you know, it's kind of, you know, let's get safe. Let's take a step back, go into those muni bonds and safe investments, even tap into some gold.
Okay, so that's the way you're playing it there, then.
For sure.
Free investment advice right
well,
there.
That's the best way to start the show. But in terms of the way you reacted to this as well, I mean, obviously, anytime stimulus comes, when you're talking about the Fed raising rates here in the U.S., I mean, it seems not to be, you know, a little bit juxtaposition there.
No, absolutely. They're doing what the Fed did, right? A couple of years ago. So, I mean, you have to consider that the global, in Europe, the European economy has not been doing well at all. And they've been slashing across the board for a lot of different countries, their global growth, their forecasts, right, for each country. Italy, right, dropped to 0.2%. Germany fell the most, I think, down to 0.7% from 1.1%. These are huge slashes to the forecast. So, I mean, to Jack's point, this is terrifying news for most investors by how much they're forecasting a slowdown in Eurozone growth.
To be fair, though, I mean, they also had mentioned that they weren't expecting a recession on the horizon in terms of immediacy.
Well, that changed. That sure changed that prediction.
But Italy went into a recession last year.
Yes, so, it did.
I mean, we've seen these signs coming. And I think for the U.S., it really, you know, you look at it and you hear what President Trump says as he's on about these interest rates and controlling interest rates. This is exactly why. And I think, you know, we're really paying attention now to what's going on. I think you'll see a little bit easier loosening of funds with the Fed here in the U.S. I think they're going to really have to think twice about the way that we approach this policy, because our dollar is so strong right now. I mean, thinking about, you know, Europe really going through this right now with the U.S. dollar as strong as we have it. I mean, there's no question that our trade deficit is going to continue to widen.
And the euro weakening against it on the news as well. But clearly, it's a good point you raise in terms of seeing how this might affect Fed policy moving forward if the ECB is moving in the opposite direction. So we're going to watch this.